Hello guys, so in this video I want to do a review of my trading week. I've had a successful trading week. I shared most of the trades to the community members. I took about 7 trades to be exact. Then I lost only one trade. I won 6 of them. That's about an 85% win rate, which is quite impressive. And of the 6 winning trades, I was able to get about 460 pips, which averages to about 76 pips per trade this week. Yeah, but out of the trades, I want to give a breakdown of how I took the trades, but I'll only focus on 2 trades, which were my best performing trades. They're the best performed trades during this previous week. I traded from Monday to Thursday because today is on Friday, but I won't be doing any trading today because, I mean, winning 6 out of 7 trades is already enough for me during the week. So, however much we get a good setup on Friday, I think my mindset is already switched off, so I won't be doing trading just to protect your trading psychology and to make sure you're disciplined, so that I can start next week again afresh. Because there's no need to try and take a trade on Friday and then you lose again after you've already made a good profit during your week. So I'm going to focus on 2 trades, Euro Audi and Euro USD, because those were my two best performed trades this week. So I'll start with Euro Audi, a trade that I took this week on Monday. It was a buy trade here. I'll do a breakdown using top-down analysis. In case you missed my previous video on trading using top-down analysis, you can just check the link in the video description. It's very important for you to understand how to analyze the markets from the higher time frames. And when you understand this, your trading is going to become very simple. So let me just show you a practical example of a trade that I took on the same concept that I taught last week. First, I will start with the weekly time frame because you want to start with the higher time frame. So when you go to the weekly time frame, I want you to first of all know this is the week, this is this week. But before the week started, you want to analyze using the previous week. So this is the previous week. You want to monitor the candlestick of the previous week. How did it behave? So when we look at the candlestick of the previous week, which is this one, the candlestick definitely, we had price dropping all the way, then it went and closed above. That is a simple candlestick interpretation. So this candlestick closed with a very long shadow to the downside. This shows that sellers were strongly rejected last week. So when sellers were strongly rejected, it could be a sign that buyers are about to take control. So after knowing that from the weekly time frame, at least you already know the behavior of last week is that sellers were rejected. So you are anticipating a possible strong buyers this week. Then we move to the daily time frame to see whether we get any confirmation. Just before we move to the daily time frame, let me mark the weekly time frame so that you can see. Okay, so let me mark the weekly time frame so that you can see where this week starts. This is where the week starts. Then now this was last week. So going back to the daily time frame, I want you to monitor and look at the behavior of the candlesticks. So this is our Monday, but before our Monday, this is what we are monitoring. Euro Audi, if you minimize the chart, you notice that price had been dropping for a while, but it looks like we now have a retracement. So when you identify that there is a retracement, you come and draw a Fibonacci using the previous impulse from the last high to the next low. When you draw a Fibonacci retracement tool, I also taught that you need to look out for price to retrace at least to the 0.5 level. So you come and mark the 0.5 level. Then you can now delete the fib tool. So that means on Monday, when the price was here, because now this is where price was on Monday before this candlestick formed, this is how last week looked like. So based on last week, we are expecting price to retrace all the way back to this point. So after knowing that, it now becomes easier. So you go back to your 1 hour time frame because I get most of my trades using the 1 hour time frame. So this is the behavior of of the market last week, and this is where price closed last week. So now this is our Monday. This is where we start our Monday. So starting our Monday, we already know that we are anticipating buyers to be strong because we've seen from the weekly time frame that the sellers were rejected strongly last week. So there is a possibility of buyers to be strong this week. So we just want to look for any reason for us to get a confirmation that we have strong buyers in the market. Then remember, price opens here on Monday. And you already know that this is our target because this is the 0.5 level Fibonacci from the weekly time frame. So you're expecting Euro Audi to retrace all the way back up here. So if you don't understand the concept of analyzing using the higher time frame, it's easy for you to look at Euro Audi from the smaller time frame and come and look for a sell trade here, imagining that Euro Audi is on a downtrend. But if you check from the higher time frame, which is the weekly, it becomes easier for you to spot that Euro Audi is retracing on a higher time frame. And the higher time frames, they are more significant in terms of market direction as compared to the lower time frame. The lower time frame should only be used for market entry alone. So I use the 1 hour. Checking this is how the Monday opened. Monday opened, then we had a long candlestick. So I'm trying to look for any significant reason to buy Euro Audi on Monday. We had a long candlestick. We had another one. So price was retracing a little bit and buying, retracing and buying. So this is exactly where I got my trade. And I want to show you how I got this trade at this point. So first of all, if you look at the behavior of price before, whenever you are trading using technical analysis, you need to understand that technical analysis, we are simply analyzing the market from the perspective that history tends to repeat itself. So you want to look at how price has been behaving before. I want you to look at this point. We had something like a consolidation and a breakout. It's a very small consolidation. That's why you need to do a lot of practice in the Forex market for you to identify such things. Because if you haven't practiced, it will be hard for you to even know that this is a consolidation. You just imagine this is a normal market movement. We also had another consolidation at this point, and we had another consolidation at this point here, a small consolidation. So I want you to identify one common thing about all these previous market behaviors. Whenever price broke out of the consolidation, what happened? It bought. Whenever price broke out with the bullish candle, it went up. Same thing here. So this is 1, 2, 3. So because this is Monday, I'm trying to look for a valid time to get into my buy trade. At this point, we have a strong candlestick, but this was very early in the morning. This was 3 a.m. Definitely, I wasn't on my charts at 3 a.m. So I want to look for a significant reason to buy. It doesn't mean that you have to force your setup. If you find nothing significant, you leave the trade. If you do find something significant, then you can go ahead and take your trade. So on Monday, the behavior of candlesticks, we also had a small consolidation, then we got a price breakout. So remember, I've just identified that from the past market behavior. Whenever we get a breakout, what happens? Price buys. So after this breakout, I'm definitely expecting the price to continue buying, but I like being very sure with my trade. So I wasn't sure about taking the trade here after this candlestick. So I was more patient. Then we had a red candlestick. So this candlestick here, so it's the details that help you to get the trade. So from this analysis, I want you to know that if you don't understand candlestick interpretation, it will be hard for you to identify such things, because I want you to look at this specific candlestick. This candlestick is more of a doji or a spinning top, but the name doesn't matter. What matters is the behavior of the candlestick, the characteristic. The candlestick closed with a long shadow to the downside. So when closing with a long shadow, remember, the first confirmation, I mean the first thing you've identified is the consolidation pattern. Then we got a breakout. So after the breakout, this is a good point to take the buy trade. But because I'm not sure, I just want to get a second confirmation that indeed buyers are strong and sellers are weak. So after getting this breakout, price made a small retracement. Then we had a long shadow here to the downside, showing you that sellers are weak with that candlestick. So when it shows you that sellers are weak, it's a high, it's a good possibility that now the buyers want to continue pushing the price high. Also, I want you to identify one thing. You see, the last time we had a long shadow, here to the downside, price tried to retrace, but it never went below the long shadow. I don't know if you can note that. It never went below the long shadow. So using the behavior of this Euro Audi, using the previous behavior, I'm using that to try to get my next trade. So when we got this doji here with a long shadow, then we already have the breakout to the upside from the consolidation. That means I'm not expecting price to go back to this consolidation. And most importantly, I'm not expecting price to trade below this candlestick because it's already left the shadow showing that sellers are weak. So I'm not expecting sellers to again take control. Even if price tries to retrace, I'm not expecting a retracement below this place. So it's at this point that I took my trade. So after this candlestick closed, I took my trade immediately with this candlestick here. I took the trade there. It was a buy trade. This candlestick, my stop loss was very small of about 30 pips. Remember, I've told you this candlestick price shouldn't get below that candlestick. So my stop loss was exactly 30 pips there because I'm not expecting price to come below this shadow. Then my TP was at this high of this candlestick. So let me just put it so you can see clearly. That is where my TP was. So I had a risk reward of about 1 to 3 because I was risking 30 pips to make about 90 to 100 pips. So that's exactly how I took the trade. So I want you to realize one thing about this trade. After taking the trade here, all the next candlesticks moved immediately to my direction. It's because I had already identified the characteristic of this Euro Audi based on the previous market behavior. Then I used that to find my trade. And when I found my trade, price moved to my direction instantly. I didn't get a lot of, price playing around with 5 or 6 candlesticks before it can go to a direction. So basically, that's how I took the Euro Audi trade on Monday. Took over 100 pips on this trade. So that was a very good trade. Moving to Euro USD, I took a sell trade here on Thursday, about 125 pips on this trade. Again, it sat on the weekly time frame. We tried to identify the possible market direction based on how the previous weeks have been performing. As you can see, USD has been selling strongly, very long body candlesticks. And just 2 weeks ago, we had a very long body candlestick showing that sellers are still strong in this market. So the bears have control in this market. So this is the current week that we are trading in where I put this vertical line. This is the current week. But remember, for you to trade the current week, you need to analyze using the previous week. So let's monitor the candlestick of the previous week, which is this candlestick. So it looks like a doji candlestick. And upon its interpretation, you can see that price tried to buy, but it was unable to buy. It ended up closing here below. So that confirms that buyers have been rejected by the sellers. And remember, before this rejection, we've seen that the previous candlestick was long body candlestick, which is bearish, showing that sellers are strong. And then the next candlestick confirms that buyers tried to push price up, but sellers rejected them all the way back to the opening price. So starting our new week, we have quite a good indication that sellers are the ones who are strong. So you look at the daily time frame. From the daily time frame, you can easily identify that based on how the week started, price was in some sort of consolidation. Because here you can see we have clear momentum, candlestick after candlestick. But at this point, now we have some consolidation. Price is not very stable. It's moving up and down in that series. So having done that, you go on your 1 hour time frame. You want to find a sell trade, yes, but don't forget that from the daily time frame, we know that price is in some sort of consolidation. So going back to the weekly time frame just to mark where my week begins, this is the candlestick we are trading. This is this week. So you mark the candlestick and you go to the 1 hour time frame. We want to find a sell entry. And so this is where our Monday starts. But starting on Monday, we've already identified from the daily that we have some sort of consolidation. So that means I won't be trading USD until I find a valid reason that price is no longer consolidating. So on Monday, there was no trade. On Tuesday, the same. There was nothing significant to take a sell trade here because if you look at the previous behavior from this point, price was it was in this same zone for a long time. In fact, you can mark this zone and you'll be able to note there's something similar about this zone. Price has been dropping and going back up in the same series of patterns. So that means there's a high chance when price comes back down here, it goes back up. So until you can confirm that the series has ended, you don't want to be taking a sell trade on Euro USD as much as you've already identified the possible direction from the higher time frame. So I didn't take a trade until on Thursday at this point. So just to show why I took the trade on Thursday, there was a formation of an M pattern and it was very complete. There's a formation of an M pattern here. In fact, this pattern ends somewhere here. So this M pattern confirms that the sellers possibly want to push the price lower. So at this point, you will start looking for another confirmation to take a sell trade. So you come and delete that pattern because you've already identified it. After the pattern was formed, we also had a consolidation. So the first thing is that I've identified an M pattern. Second thing is that I identified a very small consolidation here. Price was unable to break this zone for a while. This is a series of a number of candlesticks of about 6 or 7 candlesticks. So for all 7 hours, because each candlestick represents 1 hour, because we're on the 1 hour time frame. So for about 7 hours, price was unable to break this point. Then eventually we got this candlestick, which let me just mark it. We got this long body candlestick here, which broke out of this consolidation. So that candlestick confirms to us that sellers are now in control. So we have the M pattern, then we identify the small consolidation, then we get this a longer body candlestick, which is confirming that sellers, are strong, and that is the direction that we want price to go. So that's how I identify the trade on euros. It was very simple. It wasn't complicated. As long as you start analyzing from the higher time frame, then most of the trades you get on the lower time frame will be valid. But if you start analyzing from the lower time frame and you start looking for an M pattern independently, just focusing on these lower time frames, there's a high chance that you're going to get so many fake outs. You'll be taking the trades and they're not working. But since you've already identified from the weekly time frame, I know the price is going down. Then from the daily time frame, as much as it's going down, the daily time frame had already showed us that we were in some small consolidation here. So that means on the 1 hour time frame, when my Monday starts, I'm not looking to take a trade immediately on Monday because I understand that we are in a consolidation, and you can see indeed price was buying and selling in that series continuously for some time. So I waited until when I got a complete M pattern, and even after getting the M pattern, I didn't just take a trade immediately. I identified this small consolidation. I was watching it until we got this red candlestick here, which dropped below that consolidation at this point. So that confirmed to me that sellers are strong. That's how I took the trade. So I hope you've understood how you can identify high probability setups and trades using top-down analysis. Last week I did a series on top-down analysis, but no, this video is just to show you how you get the trades, because that was last week. That was just an educational video. But then the following week, you see we've already taken the trades and we've used the same analysis. That brings me to the end of this video. As I always insist, make sure you do lots of practice on these patterns, because it's easy for you to trade when you have these patterns on your fingertips. Whenever you open a Forex chart, it should be very easy. It must be very natural for you to identify these patterns. But if you open a Forex chart and it's difficult for you to identify any pattern like a consolidation and M pattern, keep on practicing as much as possible. So see you in the next video.